Good morning, traders and investors, and happy 2024. I was planning on doing this video live today for you guys, but I'm having problems with my Zoom account. I have to figure out what my right password is, so please bear with me. We will get this thing going. But I figured I'll do a video, a recorded video for you, like I've been doing every morning for, 7 years now. So let's get into it. Nothing to wait forward to. Now, before we begin, VIP room at noon today, link below this video. My Telegram channel, rogerscott.com/Telegram. That's rogerscott.com/Telegram. Please, all the goodies are below this video. Now let's get into it. Now, as you can see here, the S&P is down about 41 points. The Nasdaq is down about 200 points. Oy vey. What a surprise. We never saw this coming. How could it be? Obviously, I'm being extremely sarcastic because we've been waiting for this to happen. But I'm not so sure that this is the beginning of a bearish move. I think this may be just a hiccup. I think we need a little bit more than this to set things off. But I'm definitely not liking how this is looking. Also, if you look at the bond market, you'll see that the trend is still intact, but we're coming a little bit lower right here. So we got to be a little cautious, and we got to wait to see what happens and if we break below this level. Now, in terms of data this week, you've got FOMC minutes tomorrow. Remember, today's Tuesday. And folks, it's going to take a couple of days for the week to become non-fragmented. A lot of folks are still coming back from the holidays, traveling. A lot of this week is not going to be as liquid as you may expect. The big liquidity, the big hedge fund liquidity, institutional liquidity actually comes in next week, or end of this week. But nonetheless, we've got important things to look at. We've got FOMC minutes. I can't wait to see the FOMC minutes because they're going to say that the Fed has not begun talking about reducing rates yet. And the market's pricing it in at 80-something%, which I think is ludicrous. I've never seen anything like it in my life. And I've been doing this for 30 years this week. In 2 days, it'll be 30 years. ADP report comes out on Thursday, and then you've got employment data, factory orders. All of this comes up on Friday. So we've got a lot of goodies coming out on Friday, something we need to pay very, very close attention to. Again, the bond market, the S&P, and the indexes. And also, one other thing we need to take advantage of or pay attention to is the volatility index, which, as you see here on Friday, started rallying. Keep an eye. The level we need to break through, the level that I'm going to pay real close attention to is right here, the 15. Till we break the 15, this is very random. But after we break 15 and start really moving higher, that's when we have to pay attention. Also, Russell 2000, and I warned everybody about this. I warned everybody that momentum levels are cooling off, and more than likely we're going to come back down and fill this in. Remember last week, I showed you this. I showed you the stocks, how many stocks are trading above the 50-day moving average, 92%, 89%, 95%. It's just too much. This is way too much, aside from energy sector, which kind of does its own thing. But the market can't sustain this. And look at the Russell 2000, 87%. That's crazy. That's insane. So it's healthy and very normal for us to have a pullback at these levels. Now, you don't have major earnings this week. I think you have Constellation Brand and one more stock. Both are consumer stocks. You don't have any Fed, any major, not Fed. You don't have any major catalysts this week in terms of earnings. But in terms of Fed data, let's look at the global economy and let's see if we can make heads or tails out of everything. So E-mini S&P's down. Treasury yield is up. Important, ahead of the Federal Reserve's latest policy meetings and the non-farm payroll report, which comes out on Friday. Boston Scientific, that's a stock that we're currently holding in the trading pit. It had good news. It's up 2% as of Friday. This is Friday's data. It had good FDA approval on its FurPulse PFA system for treatment of fibratials. You could tell I'm not a doctor. Atrial fibrillation. Atrial fibrillation. All right. See that? I'm getting fancy with you. Chicago PMI is expected to fall weaker than expected. That's data on Friday. Now, here's where things get really interesting. Lawrence Summers said Friday that investors may be underestimating the risk of inflation as markets move swiftly towards expectations for Federal Reserve's easing. I think there's still a risk that the market's probably underestimating that we're not quite make as much progress, that we're not going to quite make as much progress on inflation as people hope. And there's not going to be quite as much room for Fed easing as people hope. Now, I could read this 100 times to you, but it's going to say the same thing. And I'm going to tell you that this is exactly what I've been saying. Meanwhile, there's an 82 chance probability that they're going to lower rates 25 basis points in March. Now, I think over the next couple of weeks, this number is going to go drastically down. If I'm correct, it should go down to about 50-40%, maybe even lower, because I think this is phooey. I think this is nonsense. But again, listen to what he just said. I think there's a risk that market is probably underestimating, that we're not going to quite make as much progress on inflation as people hope. I mean, this is the Fed telling you this. Last week, the week before last, they were saying how people are misconstruing what we're saying. They think we're going to lower rates. We're just not there yet. We haven't started talking about it yet. But here we are, 82% chance. And again, what do I know? Federal Reserve minutes are going to be coming out this Wednesday. I think that it's going to be, we haven't started talking about lowering rates, which is exactly what he said when they started asking him questions at the conference. He cut them off real quick. Oil is moving higher. Iran deployed warship to the Red Sea. Oil so far hasn't really responded that much. It's up about 68 right here, right now. But this isn't major news. And I want us to see us break this level right here on USO. This is a major resistance level. Until we break that level, it's going to be very, very dicey. And I'm still bearish on energies as a result. More choppy than anything else. Europe, giving us a little bit of tailwind, kicking off 2024 on the right track. China closed lower on the first trading day of the new year, driven by weaker than expected factory data, and a speech by Xi flagged headwinds facing the economy. Real estate stocks declined. Not good for us at all. Apple got downgraded. Apple, biggest company in the world, not good for us at all. So we're definitely getting some tailwind to the downside, not to the upside from Friday. Because the market was already cracking through. It'll be interesting to see if the bond market breaks this support line. It'll be interesting to see if energies break this resistance line. Another thing that we need to pay attention to is the Russell 2000 and whether the Russell breaks the first level, which is at 199, and then breaks the second level right here at 196. These are major levels that we need to pay attention to. The next one is right here at 193. I'll post that for you as well. But you gotta pay attention to these levels. These are very, very important levels. And once we break through this level, there's not really much holding us down, and there's a good chance that we will come right back down. I don't see a major catalyst unless the S&P 500 really holds the next couple of days. And if every data and everything is completely bullish. Basically, here's the deal. The way I'm looking at things right now, for us to stay in the trajectory that is priced into the market right now, and this is pretty important, everything has to go right. Literally, everything has to go right. Now, for us to fail, very few things have to go right. And usually, Murphy's Law. You know how Murphy's Law works. Basically, every Fed report, everything they say, every earnings update has to be amazing for us to believe that there's going to be an 82% chance that the Fed is going to start lowering rates in March. I can't even believe I'm saying this because we're already in January. And it's laughable, in my opinion. And by the way, the Fed's saying the same thing. That's what's really driving me crazy. This is one of those rare situations where the Fed is literally telling you, we're not ready yet. We're not ready yet. But the market's saying, yes, we're ready already. So I don't know who's going to win this fight. But to me, this doesn't look like it's going to continue moving. There's just no major catalyst right now. There's a 34 or 35% chance of a recession, according to the latest survey of this year. I just don't see small caps breaking out yet. Now, if you look at Cathie Woods, which we always look at Cathie Woods, my favorite trader. No. Notice, she's also starting to come right back down. So as soon as Cathie comes back into this level, it's going to start getting really nasty for us. It's not going to be good for us. So, folks, I know a lot of you were looking forward to a runaway market right now. I just don't see it. Let's look at the QQQ. Maybe some choppiness, maybe some consolidation, but not seeing at all more upside. Now, again, look at this trend. And we haven't broken this trend, but I am telling you, as I am sitting here right now, there's just not that much upside left in this market. We're already touching this resistance level right here, a support level right here. And let me just go through it. Just go a little higher here. There we go. We're literally touching this level. And unless we bounce off, we're probably going to go higher. The next major level on the QQQ is right here. Right there. And it wasn't that long ago. It was only, let's see, 1, 2, 3, 4, 5, 6, 7, less than 2 weeks ago. But that's the next major level. And the next major level above that is right here. Right there. So these are the levels in the QQQ. Now let's look at sectors. Now it'll be interesting to see if anything major has changed in the last couple of weeks. Now if you look at the cumulatively, home builders, retail, Russell 2000, semiconductors. Now interest rates are starting to go up a little bit. Well, let's see what happened in the last 3 weeks. Same thing. Home builders, semiconductors, Russell, retail, mid-caps, real estate. This is as interest rate sensitive as interest rate sensitive can get. But let's look at it up here. Ooh, wait a minute. Things are changing. Yes. Consumer staples, healthcare, utilities. Folks, these are the 3 most defensive sectors. And I think these are going to be the sectors that are going to take off, which is one of the reasons why I went into healthcare on Friday. BSX is a healthcare stock. I wanted to be in healthcare, consumer staples. These are the sectors you're probably going to see rally in the next couple of weeks. So I don't know about utilities, because if interest rates are going up, utilities would actually come a little bit down. But I am telling you, consumer staples and healthcare is where you want to be if we see more cracks in this foundation. These are always the sectors that start going up because you need consumer staples irrespective of what the economy does. And healthcare isn't driven by interest rates. It's not. So again, watch this very, very closely. Watch a sector change. I'm seeing it. And also the fact that momentum levels are this high isn't doing anyone any favors. So again, keep your eye on momentum levels, especially look at this, basic materials, infotech. I mean, this is overdone. It's time for us to cool off and start watching for a sell-off in interest rate sensitive stocks. These stocks right here. Let me just give them to you. These stocks right here. Home builders, semiconductors, Russell 2000, retail, mid-caps. That's interest rate sensitive. And start looking for consumer staples and healthcare. If you start seeing them becoming a little more resilient, you know we're on the right track. Also look for a breakdown in ARC and Russell 2000. Now, before I let you go, folks, I've been leveraging my new ProTrader Dashboard for all my trading since the summer. And the results, to say phenomenal would be an understatement. It's been mind-blowing. This is not run-of-the-mill indicator scanner. It might seem like there's a lot to take in, but trust me, it's incredibly straightforward and easy to use. I look at the market for 30 minutes right after the opening bell. It allows the dashboard to gauge stocks' true strength and see what's really happening. Then I simply run my scanner and it gives me a list of my strongest and weakest stocks all day long and twice on Sunday. No, I'm just kidding. Nothing on Sunday. Here's the kicker. It even pinpoints the first and second profit target and a stop loss. It's all done for you. Say goodbye of the days of trading in the dark. Now, I know you're eager to dive in, so join me at 1 p.m. for a complimentary session. It's going to be fantastic, and I'll talk to you guys soon. Follow the link below to check my YouTube channel. Roger Scott is the YouTube channel. Just go to YouTube and type in Roger Scott, like it, subscribe to it, and you'll be notified when I post new videos. And hopefully once I get the Zoom thing worked out, I'll be able to do these live starting tomorrow. Again, I'm hoping. Couldn't access Zoom. I'll talk to you guys later and have a great day. Send me an email, roger@rogerscott.com. Not customer service emails, trading-related emails. Bye, guys. I'll talk to you soon.